Hi there, Henry Smith here from IamWealthyandRich.com. Thanks very much for joining me. So what we're talking about today in this video series, a continuous video series, it's a journey. So it's over a long period of time, or should I say probably about a year or so, it's going to be. It's about wealth creation and action. Wealth creation and action is a journey. Success is a journey, it's not just a destination. So it's what happens on a day-to-day basis, because it does happen on a day-to-day basis. And I started this journey, should I say, really 14 months ago or 15 months ago, February 2020. Surely on the mindset level, so I had to develop the right mindset, and I worked on certain exercises to create that mindset. And then I transitioned into an investor, was able to attract money, put it into investments. And then we're riding the investment path and watching investments grow, and the journey of the investments as they go to their level, the different ups and downs they have to go through. And I watched that up until the end of 2020, or should I say January 2021. And then in February 2021, I started documenting it. Thought it would be a good idea. And so that's what I'm doing up until this date. And I was doing it on a spreadsheet. Now I'm also doing a spreadsheet and video. So this is what I do every day, just document where the market is on that particular day, talk about a few things and move on. So the market, as you may know, it goes up and down, it fluctuates, it's alive, it's a dynamic, it's a living thing. But if you zoom out and understand where the market is going, it's only going in an upward direction. But to get to that upward direction has to go through some ups and downs. Now that's all great. It's great when it's growing, it's great when it's falling. It's always great because it gives you an opportunity it's a reset. It gives you an opportunity to buy again at lower prices. And that's one of the good things about markets, if you really understand them properly. They adjust themselves and gives you an opportunity to buy in again at a lower level if you have the funds, or you can raise the funds, and gives you a chance to take advantage of the new growth. So but what I'm going to do is, for example, many people have bought in Bitcoin today in large numbers, huge numbers, because it's been a massive opportunity buy for them. And it's quite funny, the psychology of human beings, because human beings always tend to keep sticking in the now, the way things are now, not thinking about how things are going to be, okay, or where things are heading. People seem to be caught up in what things are doing now, and it's a strange thing about human nature. You really have to fight it. You have to be counterintuitive to what most people would do. There's 95%. I would say 99% and the 1%, really, to be cut it right down the middle, or really be generous. Let's say 97% and the 3%. And 97% of people think one way, and the 3% of people think another way. So that's what happens. So the way the 3% think is very, very different. They see this as an opportunity. They see how amazing this opportunity is. Something that's going to be, $500,000 or so in the future. Being able to buy it for under 50,000 at the moment is a blessing, and they want, they want more of it, and so it's a great thing for them that's happened. But those who don't understand it, they don't understand, and that's why they're in the 97%. They don't understand. They make the wrong actions. They run for the hills. They make wrong decisions. They get out of the market. They lose patience, because they don't have the right mindset. They're in the 97%, and 97% remain poor because they're using the wrong mental approach to investing. The biggest problem with most people is emotion. Emotions are your enemy when it comes to investing. You don't invest based on emotion. Okay, I mean, the market is volatile enough. We don't need your volatility of your emotions on top of that. Okay, somebody's got to stay calm. So if the market's going up and down, up and down, up and down, your emotion is going up and down, up and down, up and down. That's like a double, what do you call it, turbulence, double turbulence. And that's going to knock you right out of the market. Okay? So we need the market, let the market go up and down, up and down, up and down, but you have to remain balanced. You have to have a balanced mindset and understand the narrative, understand where Bitcoin is going, understand Bitcoin and the whole cryptocurrency industry is a new innovative industry. It's not completely new, but it's relatively new. And it's gonna, it's a new trend that's going to really change the way the world does a lot of things. And it has to have some hiccups in the beginning. It's just, but those who invested in the early times, if you invested in Amazon, $10,000 in Amazon during the dot-com boom, the dot-coms, dot-bombs, dot-coms, dot-bombs, they were saying back in the late 90s, 1997, 1998. A lot of dot-coms became dot-bombs and so on. But if you held your investment in Amazon and the like, today your 10,000 would be worth like 30 million or so. So it's just a matter of, but if you would have succumbed to the dot-com and dot-bomb fatigue narrative that people were throwing around, probably, it would have been very risky. But, the crypto space, the crypto digital asset space or cryptocurrency space as it's known, I want to talk about that, is really the internet 3.0. If you think of the banks, a lot of banks, back when the internet came on, banks, they reluctantly had to adapt the internet. They had to adapt to the internet and reluctantly had to develop apps. First of all, the pain of just they had to have a website instead of good old-fashioned banking over the counter. And then, for goodness sake, they had to then develop apps. They had to really adapt to the internet over the last 25 years. And if they didn't, any bank that has not adapted to the internet will not be in existence today. But they had to reluctantly, and I say reluctantly, adapt to it. And now the blockchain technology, Bitcoin and its blockchain technology, and many blockchain projects, financial projects, are really coming into action now, into fruition, and threatening the traditional banking system. And they're going to have to make yet another change to this new blockchain banking systems that are coming out. If they don't, they will be like as if they didn't create an app or a website. So, they will fail because market forces will take the business away from them. If somebody's going to process, let's say, finance for a house, and it took 3 months, and then go to another place that takes 1 month, where are they going to go? They're going to vote with their feet, with their fingers. So the same thing as with finance. If you can get a loan for, if you can put money down somewhere at 1% and get 1% from a bank, and you put money down somewhere else, you can get 8%. Where are you going to put your money? So they're going to lose if they don't adapt to new trends. So this new Internet of Things, this new blockchain industry environment is going to go through some teething challenges in the beginning, but eventually it's going to be widely adopted. And those who hold on to it as it's going up and down, it's like holding on to a dragon when a dragon is flying. Make sure you don't fall off. You hold on with 2 hands really tight. Okay, because when you get to the end of the journey, you'll be very glad you did. Okay, but with that said, I'm going to share my screen and go to the what do you call it? No, I don't want to go here. I'll talk about this in a minute. Go to my spreadsheet. There you go. So up to today's figures, and put the glasses on. So today is the 19th, and the time right now is 15:10, and I'm getting my figures from this page here. And this consists of one Bitcoin and several altcoins, not one altcoin, several altcoins, alternative coins apart from Bitcoin. And this is in US dollars, and this is the total amount at the top here. And on the right-hand side, the same portfolio in British pounds, Great GBP, or pound sterling. So I'm going to take this figure here, 130,811, 130,811.89. Bring that down, so that's down that's quite a jump down, and that's fine. That's in reaction to Bitcoin, because Bitcoin has gone down a lot today, the last 24 hours. And but you know, the important thing is that when it goes down, it's going to be a massive reset, because it now has to go. The further down it goes, the more further up it has to go. You know, don't forget, in the last half, Bitcoin went down to 3,000, then it was, you know, went up stable around 5,000 in say February, March last year. Then it went all the way up 10 times to 50,000 plus. So the longer this goes down, it's going to have to go up 10 times, you know, into the several 100,000 level. So it's going to be an interesting journey. 65,000, oh, sorry, not 64, 165,458. Exactly, actually. 165,458. 168,458. Is that correct? 458? 458, yeah. So that is a big pull down from yesterday. It's got to be 22,000 pull down, so that's going to be red. And that means Bitcoin must have come down by 5,000 to yesterday. Yeah, I thought it was more than 5,000, but okay. So Bitcoin has gone down, the altcoins have reacted to it. And like I said, because they're very correlated. And when it decides to go back up again, the altcoins will go back up again, because they're again correlated. And you have to take both sides of the thing. The important thing is just to hold on. You hold on and you wait for the market to correct itself, because it will correct. And it will correct. And you know, when it corrects, then things look better again. So it's got to recover everything that's lost. Not that it's lost, because it still have the exact same amount of cryptocurrencies, coins, so to speak. I'll talk about that word currency in a minute. In fact, I'll go to it now. But they still have the same quantity of cryptocurrency or altcoins, and it's just a matter of their value, you know, correcting itself and changing, and that will happen with time. There's a lot that can happen in a month. Like, you know, we still have certain times to go before the end of this cycle. And in fact, let's just go back and look at this image here. For example, if you look at 2011, this back here is 2011 on the left-hand side. You know, the market has lots of ups and downs, it went up. That was its peak. Then it came down, and this yellow part is where it was at its lowest part, and it went up again here. This is a very interesting up. Then it came down, okay? Then here's the interest. So this is the peak. This cycle here is the peak of the first cycle. The second cycle, really, this is the kind of peak of the second cycle. We're in the third cycle here, and then we're in the fourth cycle here. So first cycle, let's just say the first, second. In the second cycle, this peak, this is when Bitcoin went to about $1,000. But the interesting thing is the journey to get to this peak. Obviously, it started from it going down, and this peak, by the way, was higher than that peak. It started by it going down, okay, and then going up. This going up here, this part where my mouse is showing it going up. A lot of people would have been saying, "My goodness, here it is. Here we go. We're going up, 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 and down again." So, and before it went up to its real height. And that's similar to what's happening now. This peak we had here is similar to what we had when it went to 60,000. Okay, now going down again, only to go back up. But you see, nobody likes it when it comes down like this. You just have to accept it. It's part and parcel of the journey. So as we're here, this is where we are currently, where my mouse is in the middle here. 2021, you can see it here. It went up to around 50, 60,000, which is very similar to this, and then going down again, only to come up again. So everybody loves it when it comes up. Nobody likes it when it comes down, but you've got to take them both equally. Okay, so this cycle hasn't finished yet. Okay, it hasn't finished yet, and it's like I said, has probably reached around this. This is roughly where it is, give or take a few weeks. It's obviously doing what it did here, coming down, way down. I mean, it must have come down really low if you look at the 2013. I don't know what these figures are, but it would have come down really low, where people would be panicking and saying, is this the end of Bitcoin? Is this the end of blockchain technology? Is this the end of whatever? Okay, cryptocurrency. Cryptocurrency is dead, or Bitcoin is dead, whatever. God knows what the media, the YouTube channel, the social media channels would have been saying. Is this the end? Because no, but then this is what happens. Then when this happens, everyone would say, oh, well, I knew. I told you so. I knew it would be good. I knew this. No, you didn't. Most of you just panicked and run for the hills, okay? And you come out of the hills and say, oh, it's safe to come out. And, you know, that's where very few people would have made money, because only the strong people would have stayed in through this time. You see? So this height here, people would have thought was the ultimate height. They were wrong. Okay? You know, I've even heard some people say, you know, when we're here, oh, Bitcoin has already made its move. No, it hasn't. Okay, it's not due to come to its move until later in this year, its peak. So obviously this drop down is very, very similar to what's happened here. Before we know what comes after the drop down. You understand? So after this drop down, you know what's coming. It's getting ready. So that's going to be such a dramatic next 4 to 6 months. There's going to be dramatic climb with Bitcoin. And then the news media and the social media will all be the reverse. Oh, Bitcoin is climbing to new heights. Bitcoin has hit another record, a new all-time high. All these silly words they keep saying, which is the opposite of what they're saying today. Bitcoin has crashed. Bitcoin has gone through the floorboard. Bitcoin is this the end of Bitcoin? It's just what I'm trying to say is that trends. It never seems enough. You know, once you understand the trends, you're not surprised or shaken, because you've seen it all before. And if we do it once, we will do it again. Okay? And so it's doing what it's done, what it's normal done. It's just normal. And people keep thinking behaving like it's doing it for the first time. It's not doing it for the first time. It's done it before. So this is where we are. I would say this, where my mouse is here, this is where we are. Even though that's 2013, here. And this is what we expect to rebound. So let it be, you know, whatever, 35,000 or 34,000 or whatever. Okay, let it even go down to 30,000. It doesn't really matter, because we know what's going on. You know, I'm looking to get some more money, to get some more in there at 35,000. Maybe even go down to 30,000. I can get some at 30,000. Great, because it will carry my new money all the way up to its new heights of 70, 80, 100, 150, 200. You see what I mean? So just understand that, you know, that's the way in which things happen. It's very similar to this trend here, what's happening. Okay, very similar to this trend that is happening. The other thing I want to talk about is understanding, what's my PowerPoint here? Understanding, people should understand, you know, the real future of Bitcoin. And there are many different cryptocurrency, crypto assets, digital assets, and what the right asset classification, because, you know, because this is still new and it's getting a lot of attention, and sometimes in some cases it may attract the wrong attention, from the regulators and so on, because people they're not used to this, they're not understanding, people are struggling with the right asset classification. Now, I'm talking about Bitcoin. There are really two asset class. There are called assets and what you can call applications. Okay, I'm not really talking about application today, but when you talk about applications anyway, you're talking about applications such as things under Ethereum and Cardano and so on and so forth. I'm not talking about that today, but that's another category. But assets. Now, there's a problem here that people can land into trouble, and how to avoid trouble from the authorities. See, if you don't have the right asset classification, the government and the governments around the world can look at it from a wrong perspective. Although many government officials do look at it from the right perspective and they put it in this right classification, but people don't understand, what it was actually built for. The word cryptocurrency, for example, is a misnomer because it cannot be a currency per se. Because if it's a currency, it will be competing with the government's, the sovereign currency, and governments will not allow that because they want to have absolute control over them, and they will fight it. So I don't think it should be a currency. I don't think people should accept, people say they're accepting payment in Bitcoin, for example, as a currency, because it's not, it is very versatile as a substance, a digital substance. It can have many uses. It can be used as a currency. It's not a very good currency, but it can be used as a currency. It can be used as an asset. It can be used as a store of value. It can be used in many different things, a settlement network. But it's not really designed to be used to get the best use out of it as a currency. And like I said, governments will not like that, it to be used as a currency, because it will compete with their currency, and they won't accept any competition to their currency. So cryptocurrency is not, and the word crypto, we kind of create the problem with ourselves by giving it that very name. Although, there's not much I can do about that. But to have called it cryptocurrency in the first place, it's certainly crypto because it's cryptography technology, but it should have been called a currency. That should have been it's been wrongly christened, so to speak, cryptocurrency. It should have been called more of, because it's more of, because like I said, as a currency, it competes with dollars, euros, pounds, etc., of a sovereign currency of a country, and that word currency, they don't like it, anything to interfere with them. So for people to accept things in cryptocurrency and crypto and Bitcoin and so on, it's actually a problem, and it messes with the tax system. It creates tax liabilities as a currency and so on and so forth. So it's better to operate in the dollars, euro, pounds, and whatever your currency is, and leave the currencies to the government. Okay, we don't really need to compete with the currencies, because what this Bitcoin really is an asset. We need to be looking at asset classes. As an asset class, okay, that's completely different. That's in the same house, the same category as others. So as gold, property or real estate, we don't buy things in gold, or you don't buy things with houses. You don't use your house to go and buy a car and get change. Your house is an asset, and you don't, houses or property, they're assets. And you don't really exchange assets for assets. You exchange assets for currency, And so Bitcoin is in the same category, and assets are taxed very differently, and they're taxed, when they're sold and based on gains and so on and so forth. It's very, very different. If you're moving currency up and down, treating it as a currency, then when you exchange a currency, you're not taxed when you exchange a currency, But if you exchange Bitcoin, you'll be taxed if you're buying something with it, or selling it, because you're selling it for something. So it creates a tax. It's something that creates a tax. If you're buying it, many things with Bitcoin, you're creating many tax events. Whereas if you're, which you're not supposed to be, because it's not a currency. It's an asset. And the many institutional leaders, governments, and so on have accepted that it is an asset. and they look at it as an asset. They don't look at it as a currency, and they frown at it. You call it a currency. So be careful and don't treat it like a currency, because it's not a currency. It's an asset. So you should be called either digital asset or crypto assets. That's what they should be referred to. Okay, the right asset classification. They should be referred to as digital assets or crypto assets. That's what they really should. Even though, yes, the name is already out there, cryptocurrency, cryptocurrency, cryptocurrency. Well, that word currency messes with your mind a little bit, and you're thinking about, and messes with the government's minds sometimes, and they get a bit jittery when they think, these guys are likening this to dollars, euros, or pounds, and they will not have it. Okay, they will not have it. They will never have it, and but as an asset, they haven't got a problem with it, and that's really what it should evolve into, being an asset like gold, property, real estate, silver, and so on. These are assets, and this is just a digital asset or crypto asset. That's what it is. They're crypto assets or digital assets. So that's really what it is. I'm just just putting that in your mind so you have the right asset classification. Okay, so number one, keep an even mind when it comes to going through the markets. Okay, it goes up and down, up and down, up and down, sometimes very down and very up. That is called welcome to the crypto markets. It's very up, and it will go up again. It will be a very high swing up. Only in crypto will you get these kind of movements, and it's wonderful because that's where you make a lot of money. The other thing, like I said, the right asset classification, understand what it is and what it isn't. Yes, it can actually be used as a currency, but it's best not to be used as currency to avoid unnecessary government intervention. It's best to be used as an asset. Okay, and that's really what it's best to use at. The strongest point to be used as an asset, and not a it can be used as a settlement layer, like gold was used as a gold standard. We could have a Bitcoin standard. That's still as an asset. It was never a currency. Gold was a currency, but it's better used as an asset. And the way in which the world is structured now, the governments have monopoly over currencies. And therefore, that's why this is better used as an asset, a digital asset or digital, what do you call it? A crypto asset or crypto asset or crypto asset, digital asset. If you want to get hold of some training for your mindset, which I highly recommend, let's see if I can get that. Go back to that website that I was showed at the beginning. Highly recommend you go along to this website, IamWealthyandRich.com. The I am wealthy and rich is an affirmational statement which I say to myself, which I want you to start saying to yourself. I am wealthy and rich. So it's not really about me talking about me, it's about talking about you. When you say it, you're saying about you. And when you say it about you, it will lead your mind there. Okay, your mind. Not, it won't lead, when you say it, won't lead my mind there, it will lead your mind there. Okay, so it's all about you. How to understand the game of money and play it well. You need to understand the game of money, and how to use assets, to leverage assets to play the game of money well. Okay, and assets control money. Assets control money. So you need to know how to leverage assets to play the game of money well, and that's what my mission is. And to help you on that journey, there are many different steps to it. But the first step is really to get your millionaire mindset and investment strategy here. By the way, I forgot to do, so just do it here, put your name and email address and send you the information. One thing I did forget to do, I better close the screen to say, I forgot to do the disclaimer. I didn't want to do that in the beginning. So disclaimer, disclaimer, disclaimer. I'm not a financial advisor. I'm not a financial planner. I'm not a CPA. I'm not an accountant. I'm not from a regulated body. So these are just my ideas and what's working for me. Do your own due diligence, do your own research, please, and seek a financial advice if you think you need to, or competent, or shall I say, regulated financial advisor. The other thing is investments do carry risks. Investment can go up and down, as you've seen, but so do not invest more than you can afford to lose. Understand that. And so I should have put that in the beginning, but at least I put it somewhere in the video. And it's always under the video as well. With that, I'm going to end today's call. Thanks very much for listening. I really appreciate you listening to this video. I appreciate you supporting and watching my previous videos as well. I wish you a wonderful and fantastic day. Just, keep the faith. This is a new trend. It's going to be amazing over the next 10 years. It has to go through the ups and downs, just part and parcel, part of the journey. And but we want the rewards. We have to be prepared to go through the ups and downs of the journey. Thanks very much for watching. I will see you in the next video, and have a wonderful and fantastic day. By the way, don't forget to subscribe, like, share, and all that for this video. I should put a little notice in there to remind me to say that. I should have said that earlier as well. But yeah, don't forget to like this video, please. Appreciate it. Have a great day. Bye.